Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. So today we have our EIA show where we're going to break it into our three segments. And in the first segment, we want to talk about how crude prices are going to drift higher. You know, our view is that we were going to live kind of between 90 and 92 as we got into the end of October. And then we'd start to see some pressure to the downside. But you know, that 84 and 88 are showing to be some strong levels, which is why we thought even if it came down through 88, that was going to be a buying opportunity. It'll go back to 92. And we want to go through why we think that and where we think things are going to go over the next few months. Then we're in segment two, we're going to talk about refined products. You know, we do see demand getting a bit weaker at this point, especially when we start looking at where gasoline is now, where we think it's going to go, and how is diesel shaping up, and what is that going to look like as we go come out of shoulder season. And then the last segment, we want to look at Russian crude exports, how they've increased, even as you've seen some demand starting to slow down, some additional pressure points. And we want to look how is this going to play out into year end. So before we get into some of the things that are happening around the world, it's important to track, and we'll talk more about this in the Econ show, but we wanted to talk about, you know, the importance of the naval assets within and near Israel. Yeah, you had the U.S. Carney that took down several missiles, as well as I think it was 15 or so drones coming over the Red Sea. And it's why we've moved so many things into position from, Ike is coming in to help backstop. You have the Ford Carrier Strike Group. You have the Baton ARG. You have, different pieces that of the puzzle. But a lot of the delays that have happened were, one, diplomacy trying to get hostages out. Two, moving THAAD, which is terminal high altitude anti-missile defense, and Patriot batteries around in strategic locations to protect against any types of incoming missiles and any types of drones, as we've seen to date when the USS Carney helped really show the importance of having that there. So again, this is why there was that delay, but we still see an invasion. We do see a meaningful response as diplomacy has failed to release additional hostages. There's been continuous rocket attacks from Gaza. There's been additional attacks on U.S. military bases in Syria and Iraq. And that, again, is going to drive a response. And that's where, so be prepared. But one of the things, and for those that haven't traded crude as much as maybe I have or some other people that watch the show, typically, you get a big spike on the news and then a bleed down. So it's almost like you have an elevator up and then an escalator down because people get used to the geopolitical world. Before there was all of these different things about what would happen. Every time Ukraine, Russia said something, did something, there was a big move in oil. And that is since people have gotten used to it. And it's unfortunate. You shouldn't get used to it, but that's just the way things go. So likely you're going to get one big pop once you come to a Israeli invasion. There will likely be some sort of response in the region. I would likely short that. That is something where I think it does go to 92, maybe above 92. But again, it'll start to pull down because the fundamentals of crude, when you look at the market, when you look at what's out there, still shows some elevated numbers in storage on a floating side. A lot of gasoline in the market. Diesel's still tight. So again, gasoline is not going to improve. Not to say that the crack's going to get much worse, but it's not going to get much better. Diesel will have some movement, and realistically, it's a good point to take advantage of that pop in Brent and short that to the downside. Again, we're not saying it's going to come down a lot. Likely breaks 90, goes to about 88, and then kind of stays between that 88, 90 as it drifts as we go into next month, where we're likely to sit between 84, 88, and then that's likely where we'll see Brent as we go into December. So now when we start looking at global crude oil on the water, you can see that it's still drifting higher. Some of this is especially when you look at Russia. Russia now has, I think they're at a 4-month high in terms of crude exports. And a lot of that is just driven because they're struggling to bring back their refining assets. That's creating struggle, creating some problems. And that's, again, something that's going to continue to be an overhang when you start looking at the OPEC agreement and how things get fixed or focused on with Saudi. because they still have that million barrels off the market. So crude oil in transit has gone higher. You can see we're back to the levels that we haven't been at since essentially March into end of April. Beginning of April. So again, there's still a lot of crude out there. That's likely not going to change, especially when you look at Brazil putting a ton on the water. Venezuela is going to increase. Iran is still have some size out there. And those are things that we want to talk about more in segment 3. But when things go into motion, they get pulled out of floating storage. So you've seen another drift lower. That it's all about timing. So the fact that amount is still out there, we do see that pivoting over, and we will see that go back into floating storage, putting a decent amount back in there, and moving us back to where we were in 2022. Now turning to the U.S., the supply adjustment, moved higher. This is typically what happens as we come into month end. There'll likely be a decent true up number just based on where exports were, imports are. Exports have been coming in much higher than they actually are. Not to say that we're not averaging about 4.3 million barrels a day, but it's also going to be that truing up to see where some of the balances are, where some of the blending is. So again, this is something that typically increases into month end and then slams down and then does the same thing over and over again, as we've been talking about was going to happen as we started to export more and more. Crude stocks had a build, increase of 1.37 million. It's still well below the 5-year average, but that's all driven by Pad 2. Pad 2 did have a small build of 750,000. Cushing had a small build of 210,000, which is in line with what we were saying, kind of the flatlining, and then the slow grind higher when you look at the availability of Cushing. Pad 3, small draw, but still well above the 5-year, and then the others are a bit more stable. And we want to go through some of the drivers of that. But remember, crude oil, we're still, and it's something that we've trued up. We are at a very high level in terms of crude production. And because of that, again, remember the SPR is to support what we can't import. But if we're producing at 3.2 million barrels and we're exporting 4.3 million, it's like, well, the needs of our SPR are not the same. So again, there's some of these pieces. Obviously, there's some nonsense about the Biden administration going out and bidding for crude $20 below market. Again, nobody's going to take that deal, but I guess you can ask. But again, that's something where the SPR won't be filled anytime soon. Crude oil inventory, excluding the SPR, we're right at where we were in 2018. We do see this, again, just starting to trend a bit higher. Typically, it does this time of year, and then you start to see that leveling off and then some drawdowns as we get into November. But again, sitting at one of the lower ends. But then when you factor in products, we're still above 2022 levels. So again, it's something where we do see that trending back up, and a lot of that is driven based on gasoline. We are seeing the slowdown in exports of refined products. That's going to put some of that more additional in storage. As we see refiners coming back on, we'll also see some of that product get put into storage as well, just because we don't see demand coming in at a meaningful size. Now, when we look at crude oil and Pad 3, you can see that there is an elevated amount. The only times it was higher was 22 and 2020. So again, we're still in tough company at this point when you look at some of the flows. But again, it's just going to be a matter of what is the management of flows coming down, exports. We do see a decent amount remaining in Pad 3. And then, but then as you get the Pad 3 refiners starting to ramp back up as we get into November, that'll help bring some of this down as they try to manage, what the different flows are at this point in time. Then when we look at Cushing, here you can see Cushing, as we were saying, kind of flatlining, which it normally does at this point. It's just obviously the rate of change took us much lower, but we do see that grind higher over the next few weeks. Runs slightly down 50 basis points, went from 86.1 to 85.6. It was all driven by Pad 3. Pad 3 had a drop of 229,000 barrels a day. That's something where, again, it's just going to be that balancing act because we are coming to the end of that shoulder season. And as you can see, we kind of flatlined and start to grind higher. And that normally happens as we approach that end of October. And then you get that grind up and that level increasing over the next month. We see that happening the same way. We don't see that changing, and that'll again put a bit more product in the market. And then we'll be consuming a bit more crude, and we should see some of our imports increase, especially given there is a decent amount of Nigerian barrels available in the water, and that will come into our market. Imports, as we were saying, we expected to see some of the makeup numbers in Pad 5. We got them. Pad 2, again, we expected to come down a bit, came down right where we were saying. Pad 3, as we highlighted, is kind of here. As the refiners start to come back, that'll creep higher. But as you can see, it's still 380,000 below the 5-year. We don't see it making that up, and again, remaining at these levels. Net imports were up a bit. We do think now Pad 5 is going to have another increase. Pad 2 is going to have that bounce, and Pad 3 is going to still remain at this lower end. It'll start, Pad 3 is going to start to move a bit closer to the 5-year average, just because the 5-year average actually has a bit of an easier comp. We do think that that's going to come in just a bit, still remain below the 5-year, but again, start to see some of that increase as we go into the beginning of November. Pad 2 staying above the 5-year, it's going to remain elevated. We're going to pull down as much of that Canadian crude as we can. So again, that's going to keep our imports elevated. Implied demand, we expected gasoline to come down a bit more. As we were saying before, we had it closer to between 8.6, 8.7. Gas Buddy had us at about 8.7. So again, you're going to see some of that slowdown. As we were talking with Disty, we expected it to come to about 4 million. Came in at 4.069, so right around there. We do see a little bit of a decline coming forward, likely down to about 3.8. We are going to get some warmth, and then it gets colder as the cold weather comes in. That should, again, provide some support. Jet had a bounce. As we were saying, it's going to stay between that 1.55, 1.65. It was too low last week, too high this week. You're going to have that balancing act. Propylene had a drop down. A lot of that is just because there was a slowdown in harvest. There's still some harvesting happening. There's still some wetness out there. They're trying to wrap things up ahead of this snowstorm coming through and the increase in cold. So again, that we should get a little bit of a bump in the propane world. Gasoline demand, as you can see, still well below the 10-year average. Right around where we were in 2022. As we were saying, it's going to be a slightly down. And as you can see, there's normally kind of that bounce, then there's that slight down move. Again, it's just going to follow where we were in 2022. Nothing too crazy, but obviously, as you can see, still well below what is average. When you look at days of supply for crude, fairly comfortable, especially when you look at some of the situations here. We don't see that changing in the near term. Gasoline storage, as we were saying, is going to continue to go sideways. It came down a bit, and now it's going to waffle in this region. But when you look at the comps get much easier. So even a sideways move is bearish in comparison to where things are. And as you have refiners ramping up, trying to target the distillate crack, you inherently make gasoline, which is going to make this worse, which is why we've talked so much about gasoline and the overhang that's going to create in the global market. Distillate continuing to move lower, not in a good position given where we are. We're going to have a bit of a cold snap as we start off November. The question is going to be, do we have a normal winter? Is it a warm winter? A normal winter is not going to be good for any consumer. Diesel prices have actually bounced back up, and a lot of that is just driven based on where we sit in storage today. Jet, again, it's just going to try to manage that. You can put it in kerosene, Disty pool. You're going to try to keep that going back and forth. As we've been talking on the crude curve, for the WTI, we've been saying front months have been a bit hairy. That if you go down the curve, it's still a good opportunity. As you can see, things have moved up. At this point, it's kind of tough. I'd say you'd want to be flat. I would actually, we've been saying the long end of the curve, it's likely trying to take some profits here. Here you're probably in a good position to wait for a short entry point. You could try to play for the bounce, but again, demand continues to concern us as we set up for not only just a weaker Q4, but then as we go into 2024. Floating storage in the U.S. is grinding higher. That's going to continue to go up as we get that balancing act, and we do see some additional Nigerian purchases, Iraqi purchases that are going to show up in the Gulf of Mexico, keeping us a little bit higher. And again, that's going to be that balancing act that we talked about as Pad 3 continues to ramp up. So that's what we have for you in segment 1. Segment 2, we're going to go deeper into refined products and how that's shaping up into Q4.